So, what's going on, guys? My name is Veronica and welcome back to the channel. Today, we're going to be talking about something that could genuinely change the game for anyone invested in crypto or even just thinking about it. The rest of this year is absolutely packed with massive market-moving events, and honestly, if you're not paying attention, you could either miss out on a huge opportunity or get completely blindsided. We're going to break down the 4 biggest events on the horizon that you absolutely need to have on your radar. I've spent a ton of time digging into this, and I want to give you a straightforward, no-nonsense rundown of what's coming. These aren't just small news items, we're talking about events that have historically sent prices soaring, or in some cases crashing. From changes in Bitcoin's fundamental code to major regulatory decisions and shifts in the global economy, each one of these has the potential to create some serious waves. And with big waves come big opportunities for those who are prepared, but also significant risks for those who aren't. My goal here is to walk you through exactly what each event is, why it matters, and what the potential outcomes could look like for your portfolio, whether you're holding Bitcoin, Ethereum, or even some altcoins. So make sure you stick around for this one, maybe grab an iced coffee or whatever you drink, because understanding these key moments could be the difference between a winning and a losing year in crypto. We're going to cover everything from the Bitcoin halving to the potential for new ETFs, and even how the Federal Reserve plays into all of this. We'll look at both the bull case and the bear case for each scenario, so you can make your own informed decisions. It's a lot to cover, but trust me, it's information you're going to want to have. Let's get right into it. Alright, let's start with the big one, the main event that everyone in crypto has been talking about for months. The Bitcoin halving. For anyone who's new to this, it's a really simple but powerful concept. Every 4 years or so, the reward that Bitcoin miners get for verifying transactions and securing the network gets cut in half. This happened back in April, and it means the amount of new Bitcoin being created every day was slashed from 900 to 450. Think of it like a gold mine suddenly producing half the amount of gold it used to. The supply of new coins entering the market is drastically reduced, making the existing Bitcoin more scarce. Historically, this event has been the single most reliable catalyst for a massive crypto bull run. If you look back at the charts after the 2012, 2016, and 2020 halvings, you'll see a pattern. There's usually a bit of a lull for a few months after the event, and then, like clockwork, the price starts to climb, eventually reaching a new all-time high about 12 to 18 months later. The logic is simple: supply and demand. If demand for Bitcoin stays the same or increases but the new supply is cut in half, the price has to go up. It's the core of Bitcoin's economic model, designed to be deflationary over time. Now here's where we need to be smart about it. While history points to a bull run, the immediate lead-up to the halving can be incredibly volatile. We often see a sell the news type of event. Some miners, especially those with less efficient operations, might sell off some of their Bitcoin reserves to cover their costs, since their revenue just got cut in half. They need to upgrade their equipment to stay profitable, and that costs money. This can create some short-term selling pressure, causing the price to dip or trade sideways right before and after the event. So just because the halving happened doesn't mean we go straight up. The big question everyone is asking is it different this time? On one hand, the market is much more mature, with institutional players and ETFs, which could amplify the effect of the supply shock. On the other hand, because everyone expects a bull run, the event might already be priced in to some extent. My take is that the fundamental supply reduction is too powerful to ignore. While we should be prepared for some choppiness in the short term, the long-term outlook following the halving looks incredibly bullish, just as it has in every previous cycle. It's a foundational pillar of the crypto market. Next up, let's talk about the second biggest cryptocurrency and what could be its most significant moment yet: the potential approval of a spot Ethereum ETF. We all saw what happened when the spot Bitcoin ETFs were approved earlier this year. Billions of dollars in institutional money poured into the market, sending Bitcoin to new all-time highs. Now, Wall Street is lining up to do the same thing with Ethereum. Major players like BlackRock and Fidelity have filed applications, and the market is waiting on the SEC's final decision, which is expected to come through sometime in mid-2024. An approval would be absolutely massive for Ethereum, and for a few key reasons. First, it gives traditional investors, hedge funds, and retirement funds a super easy regulated way to get exposure to ETH without having to deal with crypto exchanges or self-custody. It's a stamp of legitimacy that says, yes, this is a serious asset. This accessibility could unlock a tidal wave of new capital. Some analysts are predicting that an approved ETF could easily push the price of ETH well above $5,000, and some even have targets of $8,000 or $10,000. It would validate Ethereum not just as a digital currency but as a productive, yield-bearing technology platform. However, and this is a very important however, this is not a done deal. Unlike Bitcoin, which is pretty clearly defined as a commodity, the SEC has been a bit more ambiguous about Ethereum. There are ongoing debates about whether ETH could be considered a security, especially after its move to a proof-of-stake model, which involves staking and rewards. If the SEC decides to reject these ETF applications, you can bet the market will react negatively. We could see a very sharp correction, potentially a 20 to 30% drop in the price of ETH almost overnight, as all that built-up hype and anticipation evaporates. So this is a classic high-risk, high-reward scenario. The outcome of this single decision from the SEC could determine Ethereum's trajectory for the rest of the year. If it's a yes, we could be at the very beginning of a massive institutional-led rally for ETH. If it's a no, it would be a major setback, and a lot of people who bought in on the hype are going to get hurt. As an investor, this is one of those binary events where you have to weigh the incredible upside potential against the very real downside risk. It's definitely one of the most important things I'm watching. Alright, let's zoom out from crypto-specific news and look at the bigger economic picture because this next one affects everything, including your crypto portfolio. I'm talking about the Federal Reserve and interest rates. For the last couple of years, the Fed has been aggressively hiking rates to fight inflation. This makes borrowing money more expensive, slows down the economy, and strengthens the US dollar. In that kind of environment, risk assets like stocks and especially crypto tend to struggle because investors would rather put their money in safer places like bonds that are paying high interest. But the tide is starting to turn. With inflation showing signs of cooling off, the conversation has shifted. Now everyone is asking not the Fed will cut interest rates, but the general consensus is that we could start seeing rate cuts in late 2024. When the Fed cuts rates, it's like injecting fuel into the economy. It makes borrowing cheaper, weakens the US dollar, and encourages investors to move their money back into assets that have higher growth potential. This is historically fantastic news for crypto. Think about it from an investor's perspective. If your savings account or government bonds are suddenly paying you less interest, you start looking for better returns elsewhere. That's when riskier assets like Bitcoin and altcoins start to look a lot more attractive. Cheaper liquidity floods the financial system, and a lot of that cash finds its way into speculative markets. We saw this play out in a huge way back in 2020 and 2021, when rates were near zero and the crypto market went on an absolutely legendary bull run. A return to that kind of easy money policy could be a massive tailwind for the entire crypto space. So, while it might not be as direct as a halving or an ETF approval, the Fed's decisions on interest rates are arguably just as important, if not more so. A dovish pivot, where the Fed signals it's ready to start cutting rates, could be the trigger for the next major leg up in this bull market. It provides the macroeconomic backdrop that allows risk assets to thrive. So, keep a close eye on those FOMC meetings and inflation reports later this year. Any hint of rate cuts is likely to be met with a very positive reaction from the crypto market. The final event we need to talk about is one that's still more in the realm of speculation, but the hype is building fast. I'm talking about the possibility of a spot Solana ETF. After the success of the Bitcoin ETFs and the likely approval of Ethereum ETFs, the natural next question is, what's next? And a lot of people in the industry believe Solana is the top contender. It's the third largest non-stablecoin crypto by market cap, it has a ton of developer activity, and it's proven it can handle massive transaction volumes. It's what many institutions would look at as the next logical choice. The rumor mill is already churning. We saw VanEck, a major asset manager, file for a spot Solana ETF earlier this year, which was a huge vote of confidence. Now this doesn't mean it's getting approved tomorrow. The regulatory path for an altcoin ETF is much less clear than it was for Bitcoin or even Ethereum. But in crypto, rumors and narratives can move markets just as much as actual news. The mere speculation that a Solana ETF happen has the potential to kick off a massive rally for its token, SOL. We could easily see a 50 to 100% pump based on hype alone. If a Solana ETF were to actually get approved, It would be a landmark moment. It would signal to the market that the SEC is potentially open to ETFs for other major altcoins, completely changing the game. This could spark a full-blown altcoin ETF narrative, where money starts flowing into other top projects like Cardano, Avalanche, or Chainlink, in anticipation that they might be next in line. It would legitimize the broader altcoin market in the eyes of Wall Street and could trigger a massive re-rating of the entire space. The approval of a SOL ETF would be bigger than just Solana. It would be a paradigm shift. Of course, this is the most speculative of the 4 events we've discussed. There are significant hurdles. The SEC could easily argue that SOL is a security, and the path to approval could take years, if it happens at all. But as an investor, you have to pay attention to the narrative. The hype around a potential Solana ETF is a powerful force in itself. Watching how this story develops in the second half of 2024 will be key. It could be the catalyst that ignites the next phase of the altcoin bull market, or it could fizzle out. But right now, it's one of the most exciting stories in crypto. So there you have it. The 4 massive events that are set to define the crypto market for the rest of 2024. As you can see, each one comes with its own incredible opportunities, but also its own set of very real risks. From the supply shock of the Bitcoin halving to the institutional floodgates that could be opened by the Ethereum and Solana ETFs, and the macro tailwind from potential Fed rate cuts, the stage is set for a very volatile and exciting period. It's easy to get caught up in the hype and imagine everything going to the moon, but it's just as important to remember that things don't always go as planned. A smart approach here involves having a clear strategy. For long-term believers, these pre-event dips and periods of uncertainty can be great times to accumulate assets you believe in. Another popular strategy is to buy the rumor, sell the news. This means taking some profits when the hype is at its peak, just before an official announcement, to de-risk your position. And most importantly, always be prepared for the unexpected. A surprise ETF rejection or a hawkish turn from the Fed could change the market sentiment in an instant. Never invest more than you're willing to lose, and consider using stop losses to protect your capital. Ultimately, being informed is your best defense and your greatest advantage. Hopefully, this breakdown gives you a clearer picture of what to watch for in the coming months. The key is to think critically about each event, weigh the potential outcomes, and align your strategy with your own risk tolerance. I'm really curious to hear your thoughts on all of this. Which event do you think will have the biggest impact? Are you bullish or bearish? Let me know down in the comments, and if you'd like me to do a much deeper dive into any one of these topics, tell me which one. Thanks for watching, and I'll see you in the next video.